Entries, supply demand, auction market theory, patience, and consistency. That is basically what I'm going to be going over in today's video. Hello and welcome back to Hyve Trading. If you're new to this channel, please hit that subscribe button, hit that like button if you like the content, and leave a comment if you'd like to see any more videos on this channel going over some things you've seen in this particular video, or if there's any other things that you didn't quite understand. I've basically gone over them in previous videos, so please feel free to check out those videos and leave a comment also on those videos. But for today, let's quickly jump in to this trade analysis on EuroCAD that I basically posted on my IG on Monday. I believe it was Monday last week, going over what I would like to see on EuroCAD. I did make two videos basically going over it live as I was in the trade. So we'll quickly jump into that. I hope you enjoy it, and then I'll be back with a summary on the analysis and the trade. See you in a sec. What's up, guys? I just thought I'll give you a quick technical breakdown of a potential trade I see setting up on EuroCAD. And if we just go up to the daily time frame, you can see that basically EuroCAD has been in a massive uptrend, started from the 25th of August 2022. And as you can see, I've got my counter trend lines, all my trend lines, and you can see that we most recently broke this inner trend line, and we've had this massive push to the downside. However, you've still got these other two trend lines that price is yet to break, which is why I've still basically got a bullish bias on this pair. But another thing to note is that we have kind of like a Elliott wave count. If we start from here, this would be the first move, second, third, fourth, with the fifth completion over here. And then what we have is a ABC move. So I'm expecting price to push from this level. Also because this was previous month's low, and you can see price is quite hesitant to push below this low. So if we drop down to the 4-hourly time frame, what you can see is that last week we had a lot of aggressive sellers coming into the market. On Friday the 10th, and you can see aggressive sellers coming in on that C leg of the Elliott wave move, but we had a ton of absorption right around this level, which lines up with the previous month's low. So basically, one other thing that adds confluence to this is we have an harmonic pattern, a cipher harmonic pattern. So basically, I'll just do up the measurements for you. So if you start from this initial push up, you can see we have the 38.2 retracement, and then we also have the extension, so X to A and back down. We've got like a 0.27 extension, and the final move for that D leg is basically the 78% retracement. Obviously the stops would have had to be below the X leg, which means this pattern is still in play. But because I don't typically trade as the move hits the completion of the harmonic pattern, I usually wait to see what price action gives me. So I never got involved in that move, and now we're getting this bullish momentum coming in. So what I'd like to see, if we drop down to the 15-minute time frame, is where we had these aggressive buyers coming in. I would like to see price return to one of these levels and give me a price action setup for me to get in. And you can see this is basically a double bottom, and if we draw the fib line, you can see we've got the 38.2% retracement, and we've got the 61.8 retracement here as well. Price could still potentially keep going up before we come back into this level, where I would also be expecting that these sellers who are trapped to add to the position to the upside, because they should be getting out of their selling positions, and then we should also be expecting some buying momentum to come in here. So that is basically my outlook on Euro CAD. We'll see how this one plays out. And as you can see, guys, currently in this trade, I'll just show you my MT4 account, and as you can see, I'm currently in this trade. To be honest, the risk to reward is not that great. As you can see, it's just a little bit above 1-to-1 risk to reward, but I'll take what the market gives me. As you can see, we retraced to one of those levels that I was expecting the market to retrace to, and this was basically CPI, because it also has an overall effects on the other currency pairs, and clearly you can see we had that sharp movement when CPI dropped. But as you can see, if I draw my counter trend line, I'll just change this, give me a second. So as you can see, basically we had this bullish push break the counter trend line. You can see during CPI, the bullish push, they couldn't close above the counter trend line, and we kind of stalled around this level for several minutes. You can see right here, and then we had this bullish break of the counter trend line. So I'm currently in this trade expecting price to hit the 0.27 fib, and basically that's the entry. So I'll be back with an update. Okay guys, what's up? As you can see, I'm still in this trade. I'll just pull up my MT4. Price came very close to stopping me out at break even. We did get very close to my TP. I'm just waiting to see what price does. This has been a game of patience on this trade. First, we got close to taking me out at a loss at this area, held onto my position. We finally, 2 days later, made it close to the take profit and decided to pull back, and once again price got close to stopping me out at break even. But I just wanted to take this opportunity to basically say to anyone out there that this is what it takes to be a consistent, profitable trader. Regardless of what price does, you have to make sure that you trade your plan and follow your plan all the way through. And that's literally what I've done. Some people might look at this and think, why didn't I just close out when price got to close to my take profit? But then what that would mean is I'm deviating from my plan. And once you start doing that, it doesn't matter how close price got to your take profit. Once you start doing that, you will continuously and slowly build on that habit to always break your rules and your trading plan. And that's something that you don't want to do if you want to be consistently profitable. So that was this trade, guys. I'll be sure to drop a video explaining the whole of this trade and what it took for me to actually hold through this trade, and how you guys can implement the same thing in your trading. Not all trades are going to be beautiful and go directly straight to our take profit. Sometimes we do have to endure a little emotional challenge, and this was one of those kind of trades. Anyways, guys, I hope you've enjoyed it, and I'll see you guys on the next one. Take care, guys. Okay, guys, welcome back. That was the trade. Now, there's a couple of things I would like to go over. First being the entry. So what happened was last week, well, the week before this week that I took the trade on EuroCAD, I had only one trade. Usually I average around 2 to 3 trades. So because I had only one trade, I was quite impatient and looking forward to the next trade that was going to play out. And that impatience basically led to me not getting the best entry on this trade setup. So let's quickly jump on the charts and I'll show you why that is. So first and foremost, guys, as you can see, I got in just after CPI. I know this isn't a USD pair, but CPI tends to have, sometimes it can tend to have an effect on other charts, as I explained in the video. And you can see we had this massive whipsaw where there was a lot of volatility and there was a lot of volume coming in, right? So you can see price came in, tested that zone that I was basically looking for price to react from. But here's where I went wrong, right? If you've seen on one of my other videos, which I'll post a link to, you can see that usually I tend to use the wicks, right, for my counter trend lines. And what we can see is we had 1, 2 touches, and this was basically the third touch where CPI came in. Now, rather than me adjusting my trend line to the wick, I basically got in on this trade, and the potential risk to reward on this trade wasn't that great based off of this entry, right? So I was only left with a 1-to-1 risk to reward ratio, a little bit above 1-to-1. But if I would have adjusted this trend line like so you can see price came back, reacted, couldn't break. And then if I would have adjusted that one more time, you can see that throughout the whole day, I wouldn't have gotten my counter trend line break as I wanted. And what that would have done is that would have kept me out of this drawdown that I experienced for several days, right? Now, you might ask yourself, where would have been the ideal place to enter? So I'll just show you. So what you see is, although price came and tested the zone, we put in a new high. And now what I would have been doing is I would have been waiting for price to come back and retest that zone, right? Which would give me additional confirmation that there are buyers in this zone. And I would have drawn my counter trend line starting from the zone to the following day, because after price hit the zone, this was after London session, and you know I don't trade London session. So I could have easily just drawn my counter trend line like so, adjusted it to these wicks over here. And what we got was, we got this aggressive buying that came in. You can see it engulfed that bearish candle, and that would have been a more ideal entry. Not only because I've done the trend line correctly this time around, but if I would put my risk to reward, so I'll just draw this, bear with me one sec. So let me put on the fib extension, and what you can see is that our targets also changed, right? So now we have a target of this 0.27 extension. So I'll just remove the fib, and you can see now what we have is we have a better risk to reward of 1 to 3. And you can see price came up to that profit target on Friday, and that would have been a more ideal entry, right? So stop loss below the low. We did come back into that zone to test one more time, and then price proceeded to our take profit target. So this would have been a more ideal setup, a more ideal entry, right? So that is basically, guys, what patience does for you. Being able to wait for a more ideal setup and not letting the fact that you've been waiting around for a trade to basically affect you emotionally to the point where now you're trying to actually force the trade setup. So that was basically one of, the main issue that I had on this trade last week. However, what I decided to do was sit on my hands because I did get involved in the trade, right? And what I like to do is basically stick to my plan. My advice to anyone would be, or to my future self would be, next time, just be more patient, be more cautious, and try and let the trade come to you a bit more. Because what I like to do is I like to wait for trade setups that gives me a potential 3-to-1, 4-to-1 risk to reward. Because when I see that price hits certain levels, just like here, just like we had here, for example, if I would have gotten here and I would have taken my profit here, seeing that there was a lot of sellers at this level, I would have basically gotten out with a 1-to-2 risk to reward, right? So these are the kind of things that I look for when getting into a trade. And so, yeah, that was basically the first thing I wanted to go over. The second thing that I wanted to go over, guys, is basically supply and demand and the importance of having buying or selling in the background of your zone. So if you have a demand zone, right, making sure that there are buyers in the zone. So I identified that there were buyers in this zone based off of this aggressive buying that came in here. Now, you might think that this isn't much buying because we had small candles coming in, but what you have to realize is there was very little to no sales whatsoever as price pushed up in this level. So that's how I identified that there were buyers in this zone. And what happened was, you can see how price held, or these buyers held this zone multiple times when price traded back into this zone. Now, this is something that, if you're familiar with auction market theory, this is something that is basically explained when you study auction market theory, right? Because it means auction market theory is basically stating that buyers and sellers have basically come to an agreement within a certain area, and that area is usually called fair value, the fair value area, right? So this area right here, where we saw buyers push the market up and then sellers pushed it back down, and then you saw for another day we had buyers aggressively come in and the sellers one more time stepped back in and held this area. However, the reason why I was so confident in my analysis is because I had already done my contextual technical analysis, which meant I was on the higher time frame. I saw what was going on and I had my bias based on multiple things that I saw happening on the higher time frame, which you saw as well at the start of this video, right? So that was basically why I was more confident in this in my trade, and I held my trade despite the fact that we had a close call where price came close to my stop loss around this level. But what I would have done is, when I saw this rejection right here, which was also a VSA confirmation, I would have probably got back into the market, right? So if we jump down to the VSA chart, what you can see, I'll just pop down to the 15-minute time frame on EuroCAD. And here we are. What you can see is, you can see at this level here, we had multiple VSA signals, right? So the first one that I got in was a potential stop in volume. So that was the one that basically triggered my main entry. And you can see every time we pop back into that zone, you can see more VSA signals coming in, right? And on the last one is my favorite signal, VSA signal, which was the shakeout, right? And as you can see, a shakeout is a mark down on a widespread closing up near the high to shake out weak holders, right? And that's basically what I love to see, because what that means is a lot of the guys who are basically scared of holding the market to go up, they are being shaken out, right? These are the weak holders, because we don't want nobody selling
as the market goes into our favor. We don't want people taking profits early. And that's why what happened was, as soon as you got the shakeout at that zone, you saw that price immediately moved up, right? So if we pop back into trading view, what you can see is we had the shakeout around this level, which was the final test of that zone, and price immediately pushed up, right? So that was basically this trade. That was the major things that I would have done, you know. So first, the entry, I would have done a little bit better, but that's why you journal your trades. That's why you review your trades, and you try and make sure that you keep emotions out of your trading decisions, so you have more patience. These are the fruits of a consistent, profitable trader. And the next thing that I would have done is I would have probably waited for a better VSA signal. However, we did get the rejection. We did get buyers holding this market, and basically price ended up going in our favor. Like I said, it required a lot of emotional control, but I managed to sit on my hands, and thankfully the trade eventually took us out at a profit. And that was basically this trade, guys. I hope you've enjoyed it. If you'd like to see more content, leave a comment below. If there's anything you didn't understand about this trade or anything that I've explained, leave a comment below and I'll try and elaborate on it at a later video. So that will be all for this video, guys. I'll see you guys on the next one. Peace.